The IRS has a chart and it says how much your family actually gets to eat. A family of four gets $1,278 a month for food. To say that differently, that basically means $10.65 per person per day for breakfast, lunch, and dinner, which it comes out to about $3.50 a meal. Today's episode, we're going to actually show you this actual chart. Hi, my name is Carlos Samaniego, and welcome to TaxNet Live with Andrew Samaniego. How are you doing, Andrew?
Pretty good. I'm hearing those numbers and I'm like, man, I'm probably right at that limit. I'm only a family of three.
Crazy that it's funny. Me and Andrew were just talking right before we came online that with just like a similar email, and it was the highest read email ever on my entire list. I had almost 6,000 people read that email, and they probably read it because they thought it was clickbait, Andrew, or they thought, yeah, that's right, the IRS is not going to tell you that. But there is a chart, right, Drew?
There is a chart, and I'm actually looking at it right now. And yeah, I mean, the numbers are pretty small compared to what we see in today's grocery markets. Again, I shop at Costco, so I shop very large bulk items. But again, we have to go to Costco about every week. So if you add it all up, man, I'm hitting those numbers.
Yeah, you know what's crazy, Andrew, and I just said a family of four. If you kind of want to get a complete idea when you see this chart, when you see what they're giving a family of one to eat, so basically if you're single or alone, and it's funny because I say this. Me and Liz went out for dinner last night, and based on the chart, we already spent for one dinner, which the dinner was $25 each for it was a steak dinner. It was actually their nightly special for that steak dinner, even tartan.
Yeah.
The cost of food is just outrageous. It's all over the news talking about, how expensive it is. And just like Andrew just said, you know what, just to make things affordable, people are going to places like Costco to try to, but Andrew, Jude, I just went to Costco a couple of weeks ago and I was looking at like steaks. There was like $17 a pound.
Yeah, meat is definitely more on the expensive side. But again, most of the time you buy it in bulk, you find like what's the best deal. Of course, chicken, sometimes it's at a low, sometimes it's beef, but usually you grab a whole bunch of them and then you split it up over multiple meals. But that's how we do it.
Well, let's jump into it. And so, when I say the IRS is deciding how much money you can actually eat, obviously they're not saying that you can't eat more than that. But what they are saying that, if you have a tax debt with the IRS and whether you can't afford the tax debt or you're trying to get into an installment agreement and you can't afford the installment agreement that they're actually saying that they want for that past due tax debt, or maybe you're trying to negotiate the tax debt, an offer in compromise, right? Mm-hmm. The IRS does have specific, they're called national standards for certain categories. Today, we're actually just going to talk about the food and clothing category, but there are standards for housing. There's standards for your vehicle, how much gas you can actually, they'll allow you to claim, which is probably the most, I think the gas thing, Andrew, is more ridiculous than even the food thing. Because especially if you're living in California. I just filled up today and it was just under $5 a gallon, which it's gone right back up, right? So with that, let's do this, Andrew. I actually just pulled up that food chart.
Yeah.
So for those
just so our audience knows, this food chart also encompasses other items as well. They call them miscellaneous items. So for food, there's there's a certain amount for food. There's a certain amount for housekeeping supplies, for apparel and services, personal care products. And then they have literally a section called miscellaneous, which is supposed to be like your fun money, I guess, in a way to call it.
So, and here it is, guys. So you can just go to Google and type in IRS national standards for food, clothing, and other items. So again, remember, and actually, you know what would be a good thing, Andrew? Let's show them. If you're trying to get into an installment agreement with the IRS, you're trying to prove that you're currently not collectible, or doing an offer in compromise, the IRS requires a form called 433. And there's a different variations of this form, but this is that 433 form. And it's actually not showing. Let me actually pull that up for you guys.
Yeah, and this 433 form is what you're doing is basically telling the government what you have in terms of assets and your income. And then you also put in these expenses, and these are the national allowable expenses that you would contribute to show what your net income / assets would be. And we call that the reasonable collection potential. So this is what this form does.
So there's the form, and I'll blow this form up here a little bit. So this is the form. So again, as Andrew was saying, you're trying to get into an installment agreement, you're trying to prove a hardship, or you're trying to do an offer in compromise. The government's going to want you to fill out this form. So if you scroll down to this form, today we're not going to go over the entire form. I just want to go over one section of this because it pertains to the food. So this form right here pertaining to the food, you're going to see right here on the right-hand side, it's page 6 of this form. You see where it says food and clothing? There it is, food and clothing. So what most people do when they fill out this form, they probably, Andrew, right? They put what they actually spend. If you're a family of 4, you might, especially if you got teenagers, that might be $2,000 for your $3,000. Who knows? Your number is probably going to be whatever number you're actually spending, and you're going to fill that form out.
Right.
But here's the interesting part. You see where it says IRS use only? They have a thing that they're going to say, well, this is what we're going to allow you. Here's the fun part, guys. Let's go look at what the IRS allows you based on that form. So I'm going to pull that up again. Let's go pull this up.
Remember, this is food, housekeeping supplies, clothes, deodorant, and then technically your fun money, miscellaneous. So it's like going to the movies or, whatever else you spend your money on.
Bingo. There we go. So we're back on the chart here. So here's the big picture of this chart. You'll see the national standards for food and clothing. And then we're going to scroll right down, and here's the secret chart. Not really secret, but it's a public chart. And these are the numbers. So you're going to see, we were just talking about a family of 4. So the IRS basically says a family of 4. And let's make a note here. When they say family of 4, doesn't mean that the actual people that are living in your home. This is the people that are listed on that tax return, your tax return that you're claiming. So let's assume it's a couple and they got 2 kids. Mm-hmm. Hopefully they're not teenagers here. The max the IRS is going to allow is $1,278 for food for 4 people. And that's where I came up with that $10 a day basically per person to eat. That's breakfast, lunch, and dinner per day.
Yeah. Now
they do have housekeeping supplies, cleaning supplies, things like that for your home. Apparel, basically clothing, shoes, and other services there. Services, haircuts. I know I'm going to get a haircut later this afternoon. What's a haircut running, Andrew? $30 for a man on average?
Yeah, $30 nowadays.
Yeah, plus women, your haircut is one haircut. I know it's way more than $30, right? So getting your nails done, another $25. So that's what we're talking about here, or here. It's a combination of these two. Mm-hmm. $118 personal care products. So, and then miscellaneous. They even give you a miscellaneous category. So they're allowing you $2,176 total. And that might seem like a lot. But when you actually add up your expenses, when you actually figure out what your expenses are for a family of 4, it's probably way more than this amount.
Probably.
And here's the interesting part, guys. Let's just go to a family of 1. One person, you're a single person and no kids involved. The max the government's going to allow you is $867 for that. Those numbers, those numbers just blow my mind, just because of going out to eat, going out to fast food. I mean, we were talking about this, right, Andrew? You go out to fast food. My office is in a complex with a bunch of fast food restaurants, Baker's restaurant. It's kind of like a Taco Bell, the evil word today. But you go down there for a hamburger, Coke, and some fries, you're talking about $40, $45.
Yeah.
Right.
For two people, yeah. It was like on average, I would say like a meal at a fast food restaurant in California, it's probably about $15 for one person.
Right. Right. Some things about this, some of the questions I remember when I was talking to somebody about this and I was kind of explaining it to them. Well, they said, well, will the IRS make, exceptions to this? Absolutely. You know what? If you can prove that you need an exception, maybe you're medically wise, you're on a special type of diet and have to have special types of food. Consider some exceptions to that. But we're just kind of explaining to you that this is the number that the IRS is starting with, and it's now we have to go in there and show them that, hey, and I've done this, and I've actually got exceptions for this. It's just like you kind of explain to them, and when we're negotiating, at least I definitely, I know when me and Andrew are doing it, we're trying to kind of, and I've done this, and I'll say, Mr. Agent, can you imagine trying to feed your family on, let's just say it's a one person, $496. Have you been to McDonald's? I've actually done this. Have you been to McDonald's recently? It's $35. So sometimes there's a little wiggle room, but again, this is the starting numbers. Now, one thing that you'll see here, well, what if you have more than 4 people in your household? I have a new client that's getting ready to get started with us, and there's 7 people in their household. There's husband and wife, and they got 5 kids. Well, what they'll do is that you'll see this chart here. For each additional person, they add $397 to the final number here. Any questions, Drew?
Yeah, can you bring me back for a second? You got me off screen.
Oh, did I? Oh, I'm sorry. Where are you at? Where are you at, Drew?
I don't know. I'm in the background, I guess.
Sorry. There you are. I apologize for that.
Yeah. So
yeah, there he is.
I think a good point to bring up with these allowable expenses is you can actually use this to your advantage, right? So let's just say you are a family of 4 and your monthly paycheck is, only about $4,000 a month. By the time you add in, your housing, automobile, and all these other expenses you're allowed, you're going to show that you're either negative or you have a very low monthly amount left over to give to the IRS or, the state of California. So this is kind of the strategies we use to, get you into a better, agreement with the IRS or to settle your debt completely.
Yeah. And again, remember is that those numbers are basically where the government is going to start. So if your number is higher than that, the government will say, well, can you show proof that you're spending more money on that? And proof is like literally receipts and things like that. And really, how many of us actually keep the receipt when we go grocery shopping? None of us do. None of us really do that. I've never met somebody that says, I got the receipts to all my groceries. But it's basically the IRS's opening position. It's not a final word. And there is legitimate ways to kind of document those real costs that you're actually spending in those categories. And the IRS will consider it. Now, a big question is a lot of times people ask, well, what about the state or Cali Claw? They basically use IRS standards. In fact, I know on California Franchise Tax Board's forms, there's a box that says that you're using IRS standards and you're checking that out, checking that number. So if you've ever kind of looked at that form and wondered what is the IRS standards, again, you go back to that. You go back to that website. Let's see. We go back to this website here.
The national standards.
Yeah, I'm trying to find it on my screen. It kind of disappeared from my screen there.
Well, it's on the recording screen. So.
Oh, there you go. Right, you go back to the IRS national standards. They also have standards for other items, and we'll bring those up in future emails and future podcasts. But if you go back there, let's pull this up. I'm trying to get it so I can scroll in it. There it is. Found it. So if you go back here, again, we just looked at national standards. You can actually go back to this. And again, just type in IRS national standards. And let's just use
standards
transportation.
For just about everything, for transportation, out-of-pocket health expenses,
Exactly. So
Yeah.
I'm not going to go through them, each one of these categories. Again, we'll do it again. But as you notice, there's different categories for different expenses. I just wanted to bring that up because a lot of people did not realize that the government actually does that. So with that, that takes us into our next category, Andrew, and I'll open it up. I always like to talk about the goal is to talk about cases or questions that we've had recently. And I had one, Andrew, and I think it's something that's really important for a lot of people to kind of consider. And I just pulled up my notes. Is that I actually had an individual. It was a man owed $23,000 to the IRS.
Okay.
And the interesting part was he owed this money, but the man, he actually lived in Louisiana, if I remember right. He lived in Louisiana, said the government was coming after him for $23,000, and he didn't even realize that he had owed the money until he filed a tax return, and he was supposed to get a refund and didn't get it back. And then when he called the IRS told him, well, we kept it because you owed $23,000. Well, what's interesting with this individual, it was for taxes back from 2010, 13, wow. 14, and 15. But he was telling me, he goes, all those years I was on Social Security disability and only making $876 a month.
Oh, so he didn't have a filing requirement.
He didn't have a filing requirement, so he couldn't figure out, he didn't file the tax returns, but he couldn't figure out why he owed the money. Mm-hmm. Well, the more we ended up talking, we ended up finding out that he actually got some documentation from the IRS that he shared with me that somebody was working on his Social Security number to work on a job that he's never worked at. Mm-hmm. So he recently just retained us to be able to go back to the IRS to prove that he didn't owe that money. Mm-hmm. And the interesting part about this case, Andrew, is that he almost got into an installment. Poor guy. He was getting ready to get into an installment agreement with the IRS. And then it finally came to a realization. It's like, well, why am I going to pay for a tax debt that does not belong to me? Right. So ended up retaining us, and we're actually going to take care of that for him. So
in that particular case, would you be filing an offer in compromise?
Actually, we're going to file returns, do an ID theft, and have a bigger discussion. It looks like the W-2s came from a completely different state he's never been to. Mm-hmm. So, and again, he didn't file because he didn't believe he had a filing requirement. And technically he doesn't, but we are going to follow the tax returns, get those updated with the IRS, and kind of explain to them what's going on.
Yeah. And for our viewers, the reason why I brought up an offer and compromise is there's two different types of offers. There's the doubt as a collectibility, and then there's a doubt to liability. So I would think this would be a doubt to liability type of case, but I guess we're just going to go the admin route for him.
Yeah, we're just going to go admin route. And the differences between the two offers Andrew just explained, the offer and compromise doubt to liability basically means that you're giving them an offer because you don't believe you don't owe the money or don't believe you owe the money. The thing with that is that you actually have to give them an offer. Even if the offer is $10, you got to give them something because there's no offer. I've done quite a few of these, actually. In fact, I'm glad you brought that up. And here's a perfect example of one that we did. So if you don't owe a debt, I have a client that got, got two W-2s from the same job. Okay. She got the original W-2, and for her job, the W-2 had, the amount of money that she made for the year. And then for some reason, the employer made a mistake on her W-2 and reissued her a new W-2. The problem is they reissued a second W-2 that said that was the correct one, but they didn't make it an amended W-2. So she got two W-2s for the so double her income in 1 year. Yeah. And she had been fighting literally going back and forth with the IRS for the last few years, and nothing was ever getting resolved here.
That's awful.
We've talked about how the IRS is a mess. It's hard to get a hold of people. Right. Maybe you're dealing with somebody and then they actually quit, got fired, variety of different reasons. Mm-hmm. So she's been dealing with this for years. And now she's like in collections. She got her letter 11, final notice of levy. And she just was pulling out her hair. I don't even know what to do. And then when she was referred to me by another tax professional, She came to me, showed me I looked at all the documentation. I actually saw the letter from the employer actually wrote her a letter, is that this was accidental. It should have only been one W-2. It's not two W-2s. So in that case, she does actually owe money for that year. The year that she in question, she did owe some money, but she didn't owe the money that the IRS is claiming that she owes with that second W-2. Right. So we actually did file an offer in compromise doubt to liability on that. Basically, kind of put the package together, presented the evidence, and submitted that, and we're just waiting to hear back from the IRS.
Yeah, and again, this process takes months, maybe years to go through. So that's why it's so important to get started as soon as possible.
100%, 100%. And the big lesson to learn from both of these cases: just because the IRS says that you owe money doesn't necessarily mean that you owe that money. You know what? The liability may be incorrect. So if you ever get a bill from the IRS and something doesn't look right, so that gut feeling is like, this can't be right. I can't be owing this kind of money or that amount of money. In fact, this morning I had a really interesting one, Andrew. That's kind of why we were late doing this podcast. I had a woman call me, not a mom. A woman called me that she got a letter from her mom, got a letter for $97,000 for unfiled tax returns. But her mom passed away a few years ago.
Oh.
So now she's getting the letters. And this was the Franchise Tax Board that sent her the letter that she owed money.
Of course.
So I started asking questions. She's like, I don't know how my mom could possibly owe any money. She was on Social Security, all these, for the last 10 years. I'm like, 97,000. And they're saying that she owes money. So the first thing comes to my mind, she said something. She said, the Franchise Tax Board said that my mom got a mortgage statement that she paid interest. And then it clicks. Well, that means your mom owned a home. She goes, yeah.
Right.
And she's all, I'm all, well, how did your mom pay for the house? And she's all, well, she didn't. She was on a reverse mortgage. I'm like, interesting. So she's on a reverse mortgage, so she doesn't have to make payments. They're basically using the equity in the home for her to live there. But then she eventually ends up selling the house a couple of years later. So, and I told her, here's what happened. The state of California is really known for this, that if you're getting mortgage interest on a house and you're not filing a tax return, they're just assuming you're earning income and not filing a tax return. So they will create a tax return on your behalf because you didn't file that tax return, and then come after you for the tax debt. And the challenging part here is that she said, I've been ignoring the notice because I assume my mom is dead, that the debt dies with her. And that is not true.
California.
And the Franchise Tax Board and even the IRS, Andrew, they're going to be looking for one, the tax returns. Two, they're going to be trying to figure out how they should be getting paid from the estate that's left over from the house, if there is an estate. And the problem is it falls upon her because she's the executor of the estate now. So I know we kind of went down a rabbit hole, but it's good to kind of hear these types of stories because they happen every single day. You were talking about a case a couple of days ago, Andrew. What was that case you were talking about?
Which one? So
you probably did.
So there's one, or not particularly these examples here, but a lot of people don't realize that a lot of people do have tax problems. They say about 1 in every 5, and about 50% of them don't even know they have a tax problem. A perfect example of this is I met a person at a 4th of July party that was in the military, and this guy owns a business, and he owes the IRS $40,000. And he was saying, well, it's not a problem yet, but it eventually it might become one. And people don't realize if you have any type of tax debt, if you have an unfiled tax return, you have a tax problem. And that's why it's so important to reach out ahead of time, reach out to one of our offices and get a tax debt triage where we'll kind of go over your case, see how to best handle that situation. Because $40,000, unless you're making like super large amounts of income, isn't going to go away overnight. And so we have to get you into one of these programs that help you either reduce the debt or start making payments towards it. And something as simple as getting just a penalty abatement could wipe out thousands of dollars on that debt. But and all this to say that if you have any sort of, tingling, if you get any kind of notice, if you get any type of, I haven't heard anything from the IRS, but I haven't filed tax returns yet, there is something wrong, and you get to adjust that immediately.
Yeah, I always tell people, especially if you haven't filed those tax returns, is that bottom line, you got to file your tax returns. Mm-hmm. And I say this, and sometimes I don't like saying it as much because I think everybody knows this. The not filing of the tax return is way worse than the not paying of the tax return.
Absolutely.
Because we get that all the time. I didn't file because I know I wasn't going to be able to afford to pay the bill. Mm-hmm. That is way worse than it's way worse doing that, not filing. Just file the tax return. The IRS can work with you in terms of if you owe money, everything from using the financials that we talked about. There are options out there. So I know we're coming up to our 30-minute window for this. It's actually at 29 minutes, but most important thing to learn from this is that, one, if you got tax debt and you can't afford to pay for it and looking for an option, understand that the IRS is gonna want these financials, and they have standards for a certain amount of debts, and we'll talk about other ones later. Two, if the IRS claims that you owe them money, now a lot of us know when you owe money and debt's legitimate, oh yeah, I do owe that money, I just haven't paid it yet. Mm-hmm. But if you're getting a bill and like, how in the world is that bill where's this bill coming from? If you have any inkling of this doesn't seem right, don't automatically get into a payment plan. Talk to myself, talk to Andrew, book an appointment with us, and we're here to kind of take a big picture look at what's going on, and at least can give you some guidance regarding what to do, what's the next steps that you do. And that's something that we do every day. Literally every day we're on the phone talking to people like you watching this and giving you ideas in regards to what to do. If you haven't got Andrew's book, it is, I just had it here, Samaniego Tax Solutions. You can actually pick up that book. You can pick up my book, Stop Hiding from the IRS, as well. And if you got a question you want us to answer on the show, just shoot us an email to questions@tax.consultant. But with that, we'll wrap this up for Friday. I'm actually going to be in Monterey. Actually, Andrew, we should do TaxNet live in Monterey next week because I'm going to be there.
Sounds good.
Friday. So we'll probably just do a live version of this from Andrew's office. With that, let's wrap it up. I'll talk to you guys later. Have a wonderful weekend.
Have a good one.